Hello everyone. Today we are going to do question number 17th. Here is a question. Receipt payment account for the year ending on 31st March 2015 of Shardaben Hospital is as follows. So here we are given receipt payment account of Shardaben Hospital for the year ending on 31st March 2015. And below that other informations are given. Here information regarding subscription outstanding, then subscription received in advance, then stock of medicines, cost of equipments, building investments, and capital funds are given. Here, information of 2 years, that is uh, date 1st April 2014 and 31st March 2015. So these informations are available. So here we have to prepare income expenditure account. Let us see how it will be prepared. So here is our income expenditure account. First, we will write heading income expenditure account for the year ending on 31st March 2015 of Shardaben Hospital. So let us see in the question in receipt payment account on income side. First item is cash on hand. It is opening cash balance, so we will not show it in income expenditure account. Then next is subscription. 75,000 is given. And in other information, we have information number 1 and information number 2 regarding subscription. So here first we have subscription outstanding for two different years. On 1st April 2014 it is 450, and for 31st March 2015 it is 750. So 450 is the subscription outstanding of previous year. So we will deduct it from subscription, and the amount which is given for the year ending 31st March 2015, that is 750, is the subscription outstanding for current year. That means it is yet to be received, and it is a subscription of current year which is yet to be received. So we will disclose it here. We will add this 750 and 450 will be deducted as it is the outstanding subscription of previous year, that is year 13-14. Then we have subscription received in advance. On 1st April 2014 it was 150, and on 31st March 2015 it is 300. So 300 is the amount that is for the next year. It is subscription of next year which we have received in advance this year. So as it is not of this year, so we will deduct it. 300 will be deducted. It is prepaid. Then 150 is the amount which we have which was received in previous year in advance, which is of this year. So as it is of this year, so we will add this, but we have received it in advance in previous year. So by adding and deducting, we will get 75,150 is the amount of subscription in outer column. Now we have donation. Donation is the income of capital nature, so we will not disclose it here. Then next is interest on investment. Interest on investment is income of regular nature. It is of revenue nature, so we will show it here. On income side, amount is 7,500. Then next is charity show income. Again, it is income of regular nature, so revenue nature, so we will show it here, 15,000. Then we have special donation for operation theater. It will be called fund for specific purpose, so we will not show it here. Then we have government aid, 22,500. Government aid is income of revenue nature, so we will show it here, 22,500 on income side. Then sale of old newspaper is given, 750. It is also of revenue nature income. So we will show it here on income side. Then let us see what are the items given on expense side, that is on payment side of receipt and payment account. First we have operation theater construction expense. It is asset, so we will not show it in income expenditure account. Then we have purchase of medicine. So here in other information, we are given opening stock of medicine, that is 9,000. Then closing stock of medicine is also given, that is 10,500. So here on expense side, we will show it as consumption of medicine. First, we will write opening stock of medicine in inner column, that is 9,000, and we will add purchase of medicine, that is medicines that we have purchased this year, that is 42,000. So by adding this, we'll get 51,000. And this year, unutilized stock of medicine is 10,500, that is closing stock. So we will deduct it. So here we will get 40,500 in outer column. So 40,500 is consumption of medicine. Then we have next item, we have honorarium to doctors. It is also expense of regular or revenue nature. So we will record it here on expense side, 37,500. Then we have salary. We will show it here in expense column, 27,000. Then sundry expense is given, 750. Then equipments purchase, that is 33,000 is given. Equipment is an asset for hospital. So here we will not, equipment purchase will not be disclosed in income expenditure account, but here we will record depreciation on equipment. So let us see other information regarding equipment. Here opening stock of equipment is given, that is 52,500. And during the year we have this hospital has purchased more equipment, that is of 33,000. So 52,500 plus 33,000, that comes to 85,500. And in closing stock we are given the value of equipment, that is 78,000. So at the end of the year, the value of here we have equipment worth rupees 78,000. So 85,500 minus 78,000, that comes to 7,500. 7,500 is DAP on equipment, that is depreciation on equipment. So here as depreciation is revenue expense, so we will record it on expense side to depreciation on equipment, that comes to 7,500. Then charity show expense is given. It is also of revenue nature, so we will record it here. Amount is 4,500. Then periodical subscription, we will record it here, 4,500 on expense side. Then fixed deposit with bank is given, that is 22,500. Fixed deposit is an investment, so it is an asset. We will not disclose it here. Then cash on hand is given. It is given on credit side. That means it is closing cash balance. We will not show it here. It will be recorded on asset side as it is a current asset. Now, in other information, let us check here. Building less depreciation is given. On 1st April 2014, it was 60,000, and at the end of this year, that is 31st March 2015, it is 57,000. So here the amount is decreasing. That means a differential amount is depreciation. 60,000 minus 57,000, that comes to 3,000. 3,000 is depreciation on building. Then investment is given. Here investment will be recorded on in balance sheet as it is an asset. Then capital fund is given. Capital fund will not be recorded here. It will be recorded in balance sheet. Now, let us see the total of debit side and total of credit side. Here, total of debit side is higher, that is 1,25,250. So it will be written on both the sides. And and if we deduct total of credit side from 1,25,250, that is total of debit side, we will get differential amount, that is 4,350, which will be called as excess of expenses over income. So here with this sum, we have done with this chapter. We have completed this chapter. I hope it is clear to you all. Thank you very much.